also soaring on earnings. Let's get back to Julia Boorstin in Los Angeles, who's been digging through that report. Julia.
Hey, Sarah, that's right. A couple more details here from the report to explain why Snap's revenue growth is faster than expected and also why it's able to add users faster than expected. You see shares now up over 7%. Now, in terms of revenue growth, it sounds like that's really based on improvements to their ad tools. They have new self-serve ad tool, Ads Manager, with additional features. They talk in the report here about how they're investing in more brand-focused buying tools. So it's not just direct response ads, but it's ads for big brands who want to reach consumers. Also more tools to help them understand who they're reaching and how they're reaching them and that ad impact. In terms of the impact on consumers, they said they have some pretty interesting stats here in Discover, which is the content platform, saying in the first quarter, nearly half of the daily Discover viewers watch Discover every day of the week. Discover is the premium content that they do original for their platform. And what's key there is it means that the engagement is very high. And then just one more detail on CEO Evan Spiegel's comments on that investment in growth, those higher than expected expenses going forward. He says we see many opportunities to increase our investments and will continue to manage our business for long-term growth. Some commentary here about how the likes of the new game platform that Snap has added will boost growth over the long term. Back to you.
Julia, thank you very much for that. Let's dive into those numbers a little bit more detail. Brent Thill from Jefferies has a neutral rating on the stock. Tom Dotan, reporter from The Information. Sam McBride from New Constructs, whose firm has been bearish on Snap since the IPO. A very good afternoon to you all. Let me start with you, Sam. Bearish since the IPO, which is a correct call for most of the run, but it's had a fantastic run year to date, including today. What do you make of the numbers?
Yeah, I mean, I think the reaction to these numbers just shows how low the expectations have become for this company. You know, 2% user growth is not that impressive, but the market is acting like they're, going to take over the world here. And we think there's been, so much bearishness, so much trouble with this company over the last 2 years. It seems like the market's willing to reward them for even the slightest signs of improvement.
Hey, Brent, do you agree with that? I know you were looking for user growth, and we did see better numbers on that front.
Yeah, I mean, this comes down to the user and revenue number. The user number is 1 million shy of its peak, so that shows you you're having users come back to the platform. They're creating more engaging experiences. They've got the Android platform now available to everyone, which was key. They said iOS was growing in Q4 and sequentially. Now Android is available. That's a bigger population of smartphones. So that's great to see, and that's stimulating the user growth number. So I think you have a couple things left that they have to figure out. You have to get a CFO on board, and certainly this pathway to profitability. The losses were a little bit better, but Twitter had good numbers. Even eBay was able to put up good numbers. I think this suggests that the overall environment's really good right now for tech.
Tom, what do you make of that point in particular? Do you think Snap's taking share back off Facebook, or given the Twitter user growth as well, do you think all of this bodes well for Facebook?
I would say it's a little too soon to tell exactly what this means for Facebook. This could just be, a rising tide lifting all boats situation. And Twitter's numbers obviously looked very strong, and Snap reflected that as well. So broadly, there is advertiser interest in digital advertising. But look, there's no denying that the user growth being up sequentially, it's now, from being flat last quarter to being up, is a huge step for Snap. They haven't had this in quite some time, and there's still a huge hole for them to dig out of. But these are the steps that a company needs to take in order to really recover.
Brent, the average revenue per user was also higher at 168 versus 163 expected. How are they doing that? How are they increasing the monetization for the users behind the scenes?
So they went to a new platform last year. They went to the programmatic platform, and they have said that as they add more advertisers, that density of that platform will build, and that the pricing deceleration will stop. They will actually be able to show prices that can go up because the auction's supporting that. So exactly what they've been telling Wall Street, they're delivering. This is good to see from a pricing perspective. And again, when you compare that ARPU relative to Facebook and Twitter, they have a long way to go. Again, I think our primary concern is when you have a younger millennial audience on this platform, can you monetize this audience? And we think as those age up with the platform, there are more engaging experiences and content that they can drive, and advertisers are going to be attracted to the platform as they see more and more people stick on the platform. So we expect ARPU will continue to grow. It's great to see, and I think it's a direct reflection of the changes they made over the last year.
Sam, what do you make of the wave of tech IPOs? Is that good or bad for Snap?
I think it's bad for Snap. I think if you look at recent IPO Pinterest, I think it's hard to look at these two companies in comparison and understand how, say, Pinterest is valued at a lower level than Snapchat. You know, they've got more users, they're growing faster, they're closer to profitability, yet somehow they have a smaller market cap. I think when you start to have more numbers to peg Snap to, it becomes harder to justify their valuation.
And finally, Sam, I mean, I get all the bearish facts that you're making, but the one thing they've got is they've got users that are in this sweet spot, which is something that all social media companies want. They've got the young users between, I don't know how they measure it, age 13 and 25. And a big proportion, actually, of people in that bracket, and that's going to be appealing to advertisers no matter what.
Yeah, I think the question is how do you grow that user base? They grew slightly this quarter, but I think if you look at their valuation, there's just an implication that they're going to grow at a much faster rate, and we don't think they have the ability to do that, especially when they're facing competition still from Instagram, from newer apps like TikTok. You know, what's the moat in this business to maintain and grow that user base?
All right. Thank you all for joining us. Brent Thill, Tom Dotan, Sam McBride. We've got a news alert now on Kraft Heinz. Eric Chemi has the details. Now what, Eric?
Sarah, so Kraft Heinz is considering a sale of the Ore-Ida frozen potato business. CNBC has learned that Kraft Heinz has hired investment bank Evercore Partners to prepare a potential sale of the Ore-Ida brand. That's according to people familiar with the situation. They think the brand could fetch as much as $2 billion, but the process is still early on right now. That valuation is subject to buyer enthusiasm. They also might be considering a sale of its entire frozen food business, which includes other brands like Smart Ones and Devour, if there is buyer interest there. As you can see, a quick pop for the stock a few minutes ago as news of this was coming out. So that's Kraft Heinz considering a sale of Ore-Ida, their frozen potato food business. Back to you guys.
Eric, thanks very much. 1.5 to 2 billion, either way, small fry relative to the overall.
Kraft's bigger problems.
Bigger problems, exactly. Still to come, Boeing shares down 11% since the Ethiopian Airlines crash in March. Find out whether the stock can rebound when it reports earnings tomorrow.
Plus, Amazon shares are nearing an all-time closing high. Coming up, we will explain why more than a dozen Seattle Seahawks football players are the stock's biggest fans right now.